Good morning, ladies and gentlemen. The FutureTrend channel is again with you, and we start our analysis of major currencies for the date of 10 May 2018. Of course, the major topic of today in the foreign exchange markets are the release of consumer price index in the United States. As we see, despite of lower readings of inflation numbers from the United States dollar continue to follow the path of United States Treasury yields. And as you know, yesterday the United States Treasury yield once again exceeded the level of 3%, reached a new high of this year around 3.05. Now, at the moment, the yield is below 3%, critically important barrier, which is at the moment in the process of eroding. But of course, today's consumer price index could put the dollar under the pressure in case of lower reading. We see that the market still ignores the lower reading of inflation components of economic indicators in the United States. We know that, for example, last week on Friday we had a payrolls report and the average hourly earnings was lower than expected. Some of other numbers, for example, the price index yesterday also were lower than expected. And today we need a confirmation in the consumer price index, because if we see a higher printing of this very important economic barometer, for sure the United States Treasury yield as well as the United States currency will receive additional support in their gains, and we could see some higher levels in both of prices. As regarding the pairs from one pair to another, the euro-dollar, as you fundamentally as well as technically, is looking really very weak at the moment. You know that for the last time we've seen rather dismal economic numbers coming from the eurozone. And taking into account that tomorrow the president of the European Central Bank, Mr. Mario Draghi, will come with his speech, it will be really very dangerous how he will evaluate the current economic situation in the eurozone, because if he comes in pessimistic, of course it will further damp the current perspective of euro rebound. Also, once again, the consumer price index of today is also very important, and all in all we could see that the end of the week promised to be rather interesting and volatile. Once again, if we see the charts of the euro-dollar at the moment, we see that the euro-dollar is really in very troubling position. Most of technical indicators are flattening at the moment, and that means that the euro-dollar is ready to plummet some lower. Anyway, approaching the lows of 2017, I mean the lows of November, located around 115.54, we prefer some caution with short euro positioning, because from the point of view the market looking at the moment, and you know that higher energy prices should result in higher inflation expectations in the United States. But as one of major banker told yesterday, it will also should result it should result in higher inflation expectations in other developed countries. From that point of view, if we see some improving economic indicators in other parts of the developed world, especially inflation numbers, for sure it should rekindle expectation regarding the future interest rates in respective economies, and for sure it should support respective currencies. But at the moment, fundamentally strong United States economy, as well as part of technical indicators, play a major role in further positive perspectives of the United States currency. At the moment, we prefer to stand aside. We don't like to jump in the bandwagon with short positioning in the euro-dollar. Otherwise, we will try to buy the currency on a possible undershooting of the level 116.80, adding to a long position on a possible undershooting 115.80 with the stop below the lows of November 2017. For those looking for a shorter opportunities, I mean for a short trade opportunities, we prefer to stand for the kind of correction to 122 level, which is probably at the moment looking a little bit unrealistic. Anyway, if we see a lower printing of consumer price index in the United States, if we see slightly more positive speech by European Central Bank President Mario Draghi tomorrow, of course, all in all of that should result in a possible correction of the euro-dollar prices. As regarding the other currencies, the dollar-yen is supported at the moment despite of the risk aversion sentiment associated with, for example, unilateral withdrawal of the United States from Iran nuclear program, despite of political developments in Italy. All in all, we see that the dollar-yen is really behaving rather well at the moment. But anyway, from a longer-term perspective, we still suggest that the pair should resume its underlying bear move while trading below longer-term moving average 200 daily line, which located today around 110.18. Of course, crossing above this line could further support the dollar-yen in the nearest future. As regarding the sterling, also today is a really very interesting day for all of British pound pairs. Why? Because of today's Bank of England interest rate decision. As you know, because of weaker numbers coming from the UK recently, and we've seen really dismal numbers like gross domestic product numbers or the consumer price index, and also a pessimistic view expressed by the Bank of England chief Mark Carney. All in all, that's of course receded expectations regarding higher interest rates in the UK. And if we take a 1 month period before, you know that most of market participants expected a fast interest rate increase conducted by the Bank of England at today's monetary policy meeting. But now the situation is abruptly different, absolutely different, and it will be very important how the members of the MPC evaluate the real state, current state of English economy, of UK economy, and from that point of view, it will be very important when we really could see a fast increase by Bank of England. And if the members will let the interest rate, for example, to hike at the next meeting, or probably some later, of course it should slightly support the sterling and result it in consolidation or kind of correction, because as you can see, we really made a kind of good job on the downside starting from the middle of April in all in the cable especially. Dollar Swiss. The dollar Swiss also, as we suggest, is ripe for a correction. But despite of the geopolitical worries, like exit of the United States from nuclear program, or political instability in Italy, we still see that the dollar Swiss still proceeds its way to the upside. And from that point of view, the kind of current hold we see in the surging prices of dollar Swiss for the last couple of days should sooner or later result in continuation of the current bull move. And from that point of view, the next barrier to watch should be the highs of 27, around 103.35. All in all, the correction is possible, but to see it, we need some real argument of such a process, and it will come today if we see the United States Consumer Price Index below our expectations. Thank you very much for your attention. We see you some later with our analysis of euro crosses.